Hello and welcome to the August Switzer Report webinar. I'm Paul Rickard from Lockdown Sydney, and also from another part of Lockdown Sydney is Peter Switzer.
Hi Paul, yeah, we're kind of inmates, aren't we? But in different organised institutions or incarceration institutions. It's still, it's better than nothing.
I'm feeling a bit casual for a webinar.
No, it feels unusual, isn't it? Not being in the same room and all that sort of stuff. But end of the day, we'll get excited when people start asking us questions, and it'll all get there. Exciting time coming out reporting season, Paul.
Yep, we'll get to that in a second. We'll just look at what happened last month. But as we always do, let's just start at the beginning. And first of all, we do these webinars for exactly an hour. So it's just after 12:30 p.m. Eastern Standard Time. We'll finish no later than 1:30 p.m. The page in front of you shows you our disclaimer. Now, it's really important that not just a lot of legalese, but what that disclaimer is essentially saying is that we don't know anything about your particular needs, individual circumstances, or financial objectives. So what we might think is brilliant financial education, it may not be appropriate for you, and because your circumstances or needs or objectives are different. So as always, we encourage you to seek the appropriate professional advice if in any doubt. And then the next slide, as we move that forward, John, just shows you how you can ask questions. So I've got a lot of questions in here already. We're going to get to as many of those as we can. But also there are two ways you can ask a question. You can click on the hand button and talk to us, or alternatively, that's raise your hand button, and we'll try to get to you shortly. And you can use your laptop or the microphone you built into your laptop to communicate directly to us. Alternatively, you can ask a question and just type that in, and we'll try to get to those as well. Okay, let's get started. Just as always, Peter, we just like to have a quick review of what happened last month, July, another up month. I think the take out of that is that the top part of the market is going better than the bottom part of the market, and that's really, and the July numbers don't include the afterpay effect we saw this week, so it's even better. So, but that's really because the performance of the banks and the major resource companies are really driving that. So that trend has been now in place for some months. So again, another up month, and we're still looking pretty well as we go to another week that's going to close higher. So market's still heading higher. Let's go to the sectors, Peter. If I just flick into those, and you can see that, look, an interesting month in the sense that the some diverse bit of mixed performance, but over the course of the month, still strong performance from materials, and that's really the BHP and the Rios and the Fortescues, plus some of the other companies like Amcor, and financials actually had a down month, but year to date, financials, that's the major banks, are leading the way. As are the major resource companies, and the only sector really in the red for the year, apart from utilities, is information technology.
And what's also interesting, Paul, is I didn't realise this, that real estate's starting to do okay, isn't it? It's up 9.1% for the year. A lot of it would have been driven by the more like the Goodman Group type REITs, but the other ones will probably start kicking in over the next year or so.
I'm surprised that has recovered so well, Peter. I mean, given that everything I read about commercial offices is vacancies,
and lockdowns are terrible for it.
And lockdowns. So I'm a bit surprised by the real estate, but it did get hit hard last year. But you're right. I mean, Goodman Group's at an all-time high, just keeps on going up and up. Very expensive stock, a great company, but the people are paying a huge premium for that. And that's probably, I guess, one of the companies leading it. But it is one of the standouts there. It's up and 9.1% in the year. That's a return in any year you wouldn't sneeze at. I guess the other take on those numbers is the consumer stocks, until the lockdown, probably doing the best of all. So things like the discretionary sector, although down a bit in July, and that's part of the lockdown starting to help. Let's move on, Peter. We've got a lot of questions. So I just want to talk about the gold medal stocks of reporting season. So, but maybe I can ask you just up front, what are the stocks you're really looking to to hear what they've got to say. And what in particular are you looking for?
Yeah, well, look, all the conventional ones. I'm waiting to see what BHP tells us about their dividend and the outlook for more dividends and all that sort of stuff. I'm curious about a company that a lot of people are mentioning to me in my interviews, Paul, at the moment is Oz Minerals because of its copper exposure. And copper is really getting a lot of people loving it, not only for the usual reasons that when you have a global recovery, and there's lots of industrial production, copper gets used, so Dr. Copper is a good indicator. But I also, the fact that there's now a structural desire for copper for electric vehicles and batteries and all that sort of stuff means that it's got like new demand. And you might have noticed with Joe Biden making this big call. What are you making? Well, he's saying 50% of US vehicles will be electric by 2030. Big call, probably won't happen. But the fact that they're saying that means electric cars and Copper's Association will benefit.
Well, we've seen that he's following the lead. Obviously, the EU has already put those sort of targets in place, and particularly ceasing production of diesel cars. That's one of the reasons I say to people, don't buy a new diesel car, because they've got a very short lifespan, in my opinion. Different for diesel trucks and other types of vehicles, but in the luxury market, there aren't going to be any new ones. So I think that's going to impact their price longer term. Anyhow, it's a big call, and we've seen that in copper, we've seen it in lithium, we've seen it in nickel. We're seeing a lot of those other companies involved in that whole EV/storage/battery/space. So that's a mega trend, and those stocks keep on roaring ahead. But it is a big call from Biden. It's only target, Peter. I don't think there's any legal sanctions, but it shows you the way the world is going. So and it's got to have an impact in those sort of parts. Just on actual stocks for reporting season, you're going to look at.
I'm really keen to see how my ZEET collection of stocks will do. Obviously Zip's benefited from Afterpay, and I was having a quick look at the ZEET stocks. I wrote that story in May of last year. At one stage, they were up nearly 50%. Then they were down about 15%. No, they were up 15, but down from the 50%. They're climbing back now. They're up 20% since I wrote that in May 19. Zip itself is up 105%. EML is up 3.85%. Now, if it didn't have the Irish bank problems, I'm hoping they make some reference to that problem when they report. They're up 3.85%. Tyro, of course, had that damaging report from Viceroy, which is probably 3/4 BS. I'm hoping that Robbie Cook, the CEO there, tells me something good. You can't tell me anything because you're on the board, so you're no use to me at all. And then, of course, Elmo's been the big disappointment. I think it's a good company. I think I even talked you into it, Paul. But I have noticed that over the last week or so, the share price has been improving. And I'm also happy to report that the CEO, Danny Lessam, has put his hand up to come on the TV show. I often find when CEOs are doing that, they often put their hand up when they think they've got better news to share, but not always. I remember Christine Holgate, when she was at Blackmores, she always came on, but she always had good news until 1 year, and she came on with bad news. So they're the four I'm interested in, apart from the more conventional ones, which I know you'd be interested: CBA, BHP, Telstra, and the like.
Yeah, well, I'm particularly keen to see CBA's whether announces an off-market share buyback. So I'm going to write about that for Monday. Telstra is a good standout. It's done really well in the market, Telstra. It's been very steady climbing up. We both said some months ago we thought about 370, 375. It's actually above that fraction. I'm interested with Telstra to see whether actually they're making headway on the revenue side. I think they did some smart things this week. I think the announcement about not charging for payphones was a good PR move, and they rolled out an advertising campaign straight away. So I think that Telstra's getting their act together. But look, they've still got to actually, at the end of the day, they've got to increase earnings, and so that's one to look out for there. and then a BHP size of dividend, and then some of the retailers, just to see just how much impact the lockdown has had, and what they're saying about sales, particularly in July. Now we've got 3 states back in lockdown. So overall, if you follow the US trend, reporting season should be pretty good, because I think in the US they're about, is it 83% of the S&P 500 have beaten expectations. So that they normally do, but that's on the high side. So that's pretty good, and we should do the same. So,
And Paul, what's really interesting is that the market is also saying we know the quarter after can't be as good as this, but it's still going to be a good quarter. It's still like I can't remember the precise numbers. I think I put it on Saturday, Switzer report last Saturday, but it was like if the current one was collective earnings up 45%, the next one will be 15 or 20%, which is still good, but just not as good as the one that comes as a consequence of getting out of lockdown and all those vaccination rates.
Okay, let's get some questions. I might just start with this question that's just come in first, Peter, because we'll just get the big picture out of the way. Yeah. This is from Michael. Do you think the ASX 200 could hit 8,000 by the end of the year? If not, could it hit the mark in Q1 next year? So what's your long-term scenario for the market?
I think 8,000 sounds too big to me for this year. We're at 7,500, 500 points by end of the year. Look, no, I think 8,000 sometime across 2022 for sure, but not this year. I think I made a fairly big call of a 10% plus rise in the early part of this year.
Which we've had, right?
Yeah, we're pretty well off there. So I'm really happy with that. And I said, if you throw in the dividends, it's probably going to be 14%. And that's probably happened. So, but I think there's going to be a little bit of a sell-off somewhere between September and October, Paul. That often is. To me, I'll be telling everyone that I think it's a buying opportunity, because the closer we get to the end of the year, the higher the vaccination rates are going to be in Australia, the higher the vaccination rates will be right around the world. We're closer to international borders opening up. All that's going to be great for those stocks that are currently suffering, and Qantas is a classic case of a company that's suffering, Flight Centre, Webjet and all them. So as the reality of vaccinations improve and we get closer to international borders, we're going to see the rebound of those reopening type stocks. That'd be great for the market. So 8,000 plus in 2022 for sure.
Okay, all right, let's go a few questions on Afterpay. We'll deal with the buy now, pay later, and all those companies first. Just rated a slightly broader question from Wendy. Does the takeover Afterpay by Square present any concerns to Australia's banking sector, the big four in particular?
I don't think in the short term, Paul. I think eventually the banks will have to look at this challenge and they'll have to adapt. Fortunately, they are so big. People aren't going to walk away from these institutions overnight, and they'll be cherry picking. These fintechs will be cherry picking parts of the business, which could undermine profitability more in the longer term than the short term. So I'm not worried short term, but in the longer term, these companies might not be as profitable. Paul?
Yeah, no, I think the long term is that it's a risk for the banks, and as is often the case, you'll see the banks will buy the fintechs. So I think they're all pretty worried about Square is someone not to be, you've got to look at the success of Jack Dorsey and Square, and the Australian banks would be a little concerned and saying that that's a powerful force, and Square clearly wants to be a lender to business, in addition to being a payments company. And I don't think it's a short-term risk, but certainly they'll be worried about it in the long term. So I think you're spot on there, Peter. Second one from Mark, with Square taking over Afterpay, does this place a floor under the likes of Tyro and EML Payments? Now, you've talked about both already, but do you see any relationship between the Square and Afterpay deal and those two companies in particular?
Yeah. I don't know EML so much, but EML is in the payments business, and this week I think they added something to their arsenal. I can't remember. I'll have to look into it again. But I must admit, I wouldn't be surprised. And once again, Paul can't say anything because he's on the board, so he never tells me anything about Tyro. But I wouldn't mind betting it would have crossed the mind of the board and the CEOs at Tyro and Zip that they would say, well, it might be in our interest to hook up. Now, sure, Tyro doesn't give Zip international help, but locally, if Afterpay and Square are going to be working together locally, why wouldn't Zip be looking at a company like Tyro, which I think is just going to get better and better as the reopening trade happens? So that could be one really important tie, and I do think it probably does put a bit of a floor under their prices.
I think we can both agree, because I won't say anything, but it doesn't do it any harm, right? So,
and it means that it's possible a foreign company could look at, but also just go back to our earlier conversation. There's no reason why our banks might be thinking, if the longer we hang around here, the more valuable these things will become, and the more expensive they will be. So, and we know already CBA has a bit of Zip through Klarna, doesn't it, Paul?
It does. CBA owns about 15% of Zip. Sorry, Klarna, roughly. Yep. So it hasn't been caught out.
Klarna's got about 4 or 5% of Zip.
Yeah. That's correct. Yep. Okay, let's just deal with the banks while we're here. So, a question from Judith, and I said, Paul Rickard said, buy Commonwealth Bank buyback if offered next Wednesday. Well, I'm going to write about that on the weekend, Judith, so you can read all about that on Monday. Does this apply to all the Big Four and Macquarie if offered? So Commonwealth Bank is the only one doing an off-market buyback. Both NAB and ANZ have announced on-market buyback, so you don't see that. That's just a broker buying effectively in the marketplace. And the reason that Commonwealth Bank is going to do an off-market buyback is it's got lots of franking credits and they're valuable in the hands of shareholders. So it doesn't apply to the other banks. And Macquarie won't be doing an off-market buyback either. And there's also a related question here from, I saw a question about Westpac. So Westpac hasn't announced a buyback yet. So just see where this question is from. Is it likely to? I think it's less likely than the others. Its capital's not quite as strong and it's still got some issues, but I don't think you'll get an announcement from Westpac until it brings out its half year result, which is not due till sometime in early November. That'd be my guess on the Westpac side.
Yeah, I agree.
So I think we're sort of done with, I suppose the final question, do you see much value in the banks, Peter, at the moment?
You and I have been big supporters of the banks. Look, I wouldn't be surprised over the course of the next 12 months they rise anywhere between 5 and 10%. It wouldn't surprise me one little bit. And the dividends will be quite good. But yeah, I can't see them falling for any good reason. If they fell too much, I'd be a buyer.
Yeah, that's a question from Westpac, guys, from you, I think, Niru, if I've got that correctly. So we'll consider that as answered. Okay, a lot of questions about the lithium and so forth. So this question from Gary, this probably covers the whole lot. But there's another question along the same lines. It says, should you start getting some exposure to EV stocks, i.e. Lynas, Oz Minerals, Orocobre, Pilbara, or stay with BHP and Wesfarmers, which have some exposure?
Well, let me say this to you.
They've gone up a long way, some of them.
Yeah. They've gone up a long way. I think probably the smartest strategy would be to be cashed up if there's a sell-off and buy for the long term. They're all going to do well in the long term. And anyone who's interested in this question should look at that, listen to and look at that podcast I did with Luke Smith from Ausbil last week. Not only did he talk about BHP's outlook and the iron ore price, but he also looked at all the miners that will do well going forward. And the conclusion was, okay, you might buy in now and that you're buying at elevated levels, but in 5 years' time, they're going to be much more elevated. I think that's the bottom line. So you either wait buying on a dip, or if you buy now, you might have to wait a while. But let me say this to you, Paul. In March, when Lynas was around $6, look how quickly it rose. It went from 250 to 6, and it came off the boil a bit, and look at it's gone again. It's gone from what 550 up to 750.
Yep.
And I think companies like this will probably do this over time.
Yeah, I've missed sort of the Linus bus. I haven't wanted to sell it. I've been trying to look to buy it, but I haven't been brave enough. And no sooner do you look and it's up to $7.50. I'm probably a little hesitant to get in now, but I think on the dip, I think Linus looks interesting. So let me ask the question the other way around. This is from Sandro. It says, "Is it time to take some profits in Linus?" IGO, which is big in the nickel space, and also Galaxy, which of course is another lithium producer.
Well, sure. If you're that kind of investor, you take profit. I would maybe sell half of them and pocket the profit, and assume that there might be a sell-off. But if there's not a sell-off, you've missed the next leg up. But that next leg up might be a lot slower, given how solid these gains have been. But I must admit, I let my profits run until I get a little bit more negative. At the moment, the inclinations are pretty steep, aren't they, Paul?
Yeah, they are. So we might just do another question here. I might come back to those. So this is a question in from on George. We'll do this quickly. What do you think of the reporting by BWP Trust? Do you expect the share price to fall? I think it only went down a couple of percent. BWP Trust of course, owns Bunnings, which should be pretty stable. I don't think there's a huge. I'm not surprised it's come down that much, but maybe that puts it back on the radar a little bit. I think some of these trusts got pretty expensive, and I don't know how. What I'd suggest you look at is what the market price, how that relates back to its NTA. So maybe that fall is actually creating a bit of an opportunity in BWP Trust.
Yeah, I think so, Paul. Yeah.
Okay. Question here from Tony. Hi guys, what do you think of the prospects of the beta shares ETF emerging markets, which I think is EM? Just have to find that code for you.
My worry there, Paul, is, China's making it hard. This week they got stuck into 10 cents, and they got stuck into Alibaba. I think Baidu's also copped it as well. I just think that the China aspect and what Beijing's up to at the moment makes me very hesitant. Now, sure, you could go back and use the Buffett quote, be greedy when everyone's fearful. But I just think Beijing's just putting a curveball into investing in emerging economies such that I don't know what to do. I'm going to avoid it, quite frankly, because to the left, that's what this fund should have been doing. That really steep rise. But look, since that Beijing's been playing silly you-know-whats, it's just caused wreaked havoc, and I'm just not interested in investing with those sort of curveballs that are being thrown at you.
I might do another one here and then show you the way I think you can invest in this a little bit more intuitively. So this is a question from about the Asian tigers, which has also come off. That's Asia. So that includes a lot of things like Tencent. We saw what happened when China got a bit Nazi about this week, if that's the right word, about the games and so forth. I think there are other ways you can play these markets. I actually prefer an active manager in this space, simply because I think they can better position rather than. This is the trouble with the index ETFs. Sometimes there's no. They're on autopilot, right? And you've got no way of sort of guarding against the unexpected, particularly what I describe as a pretty high risk part of the market, which is Asia and emerging markets. Have a look at FEMX, which is from Fidelity. If we can put FEMX up there, John.
Yeah.
That's why I prefer to play emerging markets, right?
Yeah.
So that's my answer to that question. Okay.
Good answer too, Paul.
Yeah, it is a good answer. I was pretty pleased with that. I wasn't expecting that chart to look so good. Quite as good, really.
But by the way, they have featured on our investor seminars for the last 2 or 3 years, and Anthony Doyle often comes on. The point he makes is that they do go after those up and coming Chinese companies that Chinese people deal with. But yeah, they've done very well.
Okay, a question from Linda, and I've got a couple of questions on gold. So which gold stocks would you recommend which have dividends and also have most of their mines in Australia or other first world countries? So, Linda, I think I wrote about that the other week, but most gold companies most miners don't pay dividends. I think that if they are, they're very small. I'd probably suggest you have a look at Newcrest, which is NCM, which is the biggest. The other one, which is big locally, of course, is Northern Star, which I think is one you prefer, Peter, don't you?
Yeah, I think because it's been a good performing company over a long period of time, the CEO and management is very, very good. But I agree with you. Buying both of them makes a lot of good sense, Paul.
And I think you raise a good point. I mean, that's one thing to mining companies. I always feel a little more comfortable when the mining company's assets are local or countries from first world as opposed to third world, because just standards of less political risk, less legal risk. And that's why I always get a little concerned about operations in Papua New Guinea or Africa. And so you need to, I think, as well as looking at cost of assets and asset quality, I think you just can't ignore political and geopolitical risk when it comes to some of these businesses. So I understand the point of the question. Okay,
yeah,
another question.
For the analysts, think about 21% upside for Northern Star, Paul.
Okay, so this question also from Rama. Related question: is there any reason why the BetaShares Gold Bullion ETF, which is currently ahead, that's under the quote of QAU, pays a distribution, while the ETFS Physical Gold, which trades under the ticker Gold, or Perth Mint Gold do not? I can't tell you offhand as to why they do. I would suspect the distribution is pretty small, like less than 1%. So. But, something to bear in mind. Typically, maybe they're just more active at lending their gold, and these ETFs hold physical gold, and they will lend it in the market, and they get paid to lend it, and so that comes back to you. But I can't give you a point of reason. But I'm sure the distribution, if it is very small. Then a question from Gail: does a hedged ETF protect you against a falling or a rising dollar? Maybe I can just answer that one quickly, Peter. It protects you against a rising dollar, and it's a rising Australian dollar. So that's one of the issues to be on guard about. Okay. Question here from Douglas on AGL. AGL lowest for a long time, worth buying now, even though energy is slow. So do you want to? I wrote about AGL earlier in the week, Peter. Do you want to comment on AGL? We might have a look at
my comment would be read Paul Rico, because you've been anti-AGL for some time, and you've gone a little bit more positive on the AGL, Paul.
Yeah, well, I mean, I'm a little more positive, and I do like the idea of their split between the dirty AGL and the green AGL, or dirty being the power station business. AGL is not a gas company, folks. It has a little bit of gas. It is a power company. It produces electricity. It owns 3 major power stations. It owns the Liddell Power Station. It owns the Bayswater Power Station, both in New South Wales, and also owns Loy Yang B in Victoria, and also owns a power station in Adelaide, in South Australia, Torrens Island. So its major business is producing electricity. It is also a retail business, but and that's essentially what's being split off of it, the retail and the green parts, whereas the dirty part stays into a company that's going to be called Axel. But I think there's a bit of upside with that demerger. Take a little while, but there's no short-term reason to say that it's going to get a big boost, but I think there's value in AGL long-term. For those
I'll get Mike Gable, Paul, on Monday to look at AGL, see what the charts are saying. It's obviously trying to form a base right now. You can see it, but gee, it's been terrible for quite some time.
Okay, so that leads us on to ESG, and some questions here. this is a question from June. I'll throw this one. It relates to BHP, but we can also have a discussion around Woodside. Can you please give your opinion on the valuation and continued rise or otherwise of BHP re ESG risk?
Yeah, I think BHP is trying to manage that. Now, obviously, the coal assets are no help to them, but they are, going back to their potash, which is fertilizer, Paul, isn't it? And they've got copper, and I think the green world is going to have to accept that copper is a part of improving the implications for the environment from, fossil fuel driven cars. Electric vehicles are going to be much better there. I think BHP will go okay, but I don't think it's going to be savage like other miners might be, like coal miners. And I think they will try and tap into the ESG community by improving their asset mix. And what was the other one, Paul?
Well, I guess just to add to that, it's a headwind for BHP. That's why it's also trying to get rid of its coal assets. It's been trying to sell its thermal coal assets for some time, and why it's also trying to do a bit of a deal with Woodside on some of its oil assets. So BHP is trying to tackle it, but you've got to say it's still a little bit of a headwind. I guess that relates to Shervinaz's question on Woodside. Your view on Woodside, why is its price falling when the oil price is so high? Is it worth holding?
Yeah, it's a good question, Shervinaz. The analysts think there's 26% upside, but they're gambling on the oil price. They're gambling on ESG affected funds, not dumping Woodside. I must admit, we did talk about buying it around $17 or so. So I'm currently in the money, but I'm like Shervinaz wondering whether I should sell it now. Because
Woodside has got. Certainly, I think there's ESG forces at play with Woodside. You've got the discussion around Woodside and BHP. Woodside buying effectively BHP's oil assets in Australia, the Bass Strait, and then issuing a whole lot of shares to BHP, which BHP would then demerge and give to its shareholders. So that would increase a whole big increase in Woodside shares. I guess all those things are depressing the price a little bit. We've got an acting CEO, and you've got major investment decision around Scarborough up in the air at the moment. We had some news on that during the week about how much that might now cost. So I think all of those things, people aren't seeing any urgency to go and buy Woodside, and that's why it's not doing well. If you look at that whole energy sector, perhaps we didn't draw that out of it, Peter. It's been the weakest performing, terrible performance this year. All oil companies, Australian oil companies, are doing it tough. And I think the ESG is a big part of that.
Yeah, and I'm thinking to myself, even if Woodside rebounds, how high is it going to rebound? Is my money better off in a company like Qantas, who I think will rebound in 2022 when international borders are opening up? So I think you do have to look at, even though I think Woodside will go higher, my question will be, are there better companies to be in, even in the short term? Being short term being 1 year.
Okay, so a question here from, we'll just do another one from Sean. Origin Energy, again, disappoint. Should I continue to hold or sell? Let's have a look at Origin Energy while we're just dealing with the energy companies. Again, it's like most of these charts, Peter, it's pretty disappointing, and it's a bit like the AGL chart. I'm just not a huge fan of Origin, but I think the analysts see upside, don't they?
I think they do, Paul. Just give me 1 second of Origin. I don't know if I said to Shervinaz, the analysts think Woodside's got 26% upside. Let me go Origin now. Here we are, 10.8% upside with Origin.
Yeah, I'm just not in the Origin camp, so I just can't get excited about that as a company. But they're getting cheap, so I'm not a buyer of Origin at the moment. Just not on my radar. Okay, so a question here from I should go to this question on Appen. This is from John. He also asked about Elmo. So I think we've done Elmo already. We talked about Elmo is up about $5. Has done a bit of a boost this week. But thoughts about Appen, which is just still washing around, Peter.
Yeah, and I'm kind of surprised that it hasn't started. The analysts still think Appen has a 47.1% upside, and you know, I'd be expecting to see something positive over the next 6 months, or I might have to revise my view on Appen. I do have someone who is close to one of the significant board members. I'm going to try and get him to deep throat some information on the Appen. But I'm sticking with it, Paul. But I'm surprised as America gets back to more normal, why Appen hasn't shown a little bit more improvement.
Yeah, I think there might be some upside in Appen. It's one result I'm looking for fairly closely. That's if we come back to reporting season. I think you might just get a bit more positive out of Appen at this reporting season. So
I wouldn't dump it before reporting season.
Yep, so that's what I'm looking at. Okay, so a question here from Carlos about Bega cheese, which is a good one because I've been recommending that. Bega cheese has had a large pullback. Is it a buying opportunity for long-term hold? I'm not really sure why Bega cheese has come off this year, at least in the last few months or so. So I actually think it's a pretty well-run dairy producer. We've made some good acquisitions, and I've been a shareholder of Bega Cheese now for some years, and I've done okay. So I guess I'm not sure why it was ever quite at $6.50, but that's where it was, and it's come back. So it may be one worth just looking on the radar a little bit.
Yeah, it's analysts think 30% upside, Paul. I don't like the look of the chart at this point in time. I'd like to see it sort of forming a bit of a base. Can't see why it would go off the boil. I really can't.
Okay. So a question on a company that reported today about ResMed. So that reported last night in the US. It reports quarterly. This question is from, where's it gone? From Hugh. I think it's off a little bit today because it just came off a little bit in the US last night. But look, it reported pretty strongly, I thought. Pretty well matched expectations. It's a pretty expensive stock, but a number of our clients hold in their portfolios, and we continue to recommend it. It hasn't disappointed so far, and it may have had too steep a run up. That's probably my only question looking at that chart. But
we've been supporters of ResMed, and they have delivered. They do fit into that definition that we have around investing in world-class companies, and that's what it is. And also, Paul, I think one of its rivals, Philips, has had a recall, haven't they, on their products?
Yeah, that was one of the reasons the price was depressed, was because of competition risk. That's what the market was worried about with because ResMed is in the sleep apnea game, and you've now seen, I think, even having had to watch a bit of commercial TV with the Olympics recently, Peter, you're starting to see some ResMed ads on mainstream TV.
I thought you were going to complain about your partner, falling asleep while watching the Olympics, and you were disturbed by it, or vice versa.
But of course, their major market's not in Australia; it's in the US, right? US and Europe. But so that was probably the reason why the price came down a bit, because of competition risk. But the competitors haven't eventuated. And ResMed's done pretty well. So the other thing it has done, Peter, is it owns it did a bit of a diversification in buying a sort of a software company, which is an adjacency, and that seems to have been like a fairly strategic move. Anyhow, look,
very good management, Paul. Very good management.
Yeah. Okay, let's go to a question here on Boral from Vincent. Will my Boral shares go up further with the 7 Group takeover? Should I be selling now? Well, I'd suggest to you, Vincent, you've missed the boat. The takeover was at 7.40, Seven Group now owns about 62 or 63%. It might even be higher than that. That price is not going to go up unless Seven Group wants it to go up. So, look, I'm not sure how far lower it's going to drift, but the time to get out was either to accept a takeover or to sell on market when it was at 7.38. So, the question you now have is, will it go back? Because Seven Group doesn't need to buy any more shares. They control the company. On the one hand, you can say, well, Kerry Stokes and Ryan Stokes saw a lot of value at $7.40. So doesn't that make this thing pretty valuable at $7.05? That's one way to look at it. The other way to look at it is, well, at some stage they'll buy more, but they're probably in no hurry to. And no, a lot of people in the market won't invest because they don't want to be in a company which is their minority shareholders. Don't know how to advise you on that one, but I think you've missed the boat in terms of selling, put it that way.
Well, at the best price, you mean, don't you, Paul?
Yeah, I mean, I don't think it's going to get back up to 7.40 for some time.
No.
I think
in the short term, at least.
Yeah. Okay. So a question here from David about Wesfarmers. When I wrote this article about 6 months ago saying Wesfarmers would go to $60, didn't get much feedback. It's now at about 63. It's getting very pricey, David. I think Wesfarmers is suddenly people have realised it's got some lithium assets. That's part of it. They're probably paying too much. Maybe Bunnings, maybe they're benefiting from lockdown. It's a very well-run company. I would say it's probably in profit-taking zone at the moment. I wouldn't be buying at this sort of level. What do you think, Peter?
Totally agree. Great company. We've always liked it. It's defied the pessimists, but I think it's probably, if you buy now, you could get disappointed. You're still holding a great company that one day will be $70 and $80, but I think in the short term, it's more likely to come off than keep going at that rate.
Okay, a question here about the REA REA, which reported this morning. This is from Shabir. It's come off a bit of, I think, we can put that up. It's just down today. I don't quite know. I had a quick look at the report. It didn't look that bad to me, but it may have been just shy of expectations. It's a really well-run company. I think if it pulls back a long way, I'd be looking to perhaps get back into it.
Yeah.
What do you think?
Yeah, Paul, we look at that chart, that's just a bit of profit taking. The lockdowns may well be affecting it to a degree because some auctions aren't going ahead, but you'd think there's going to be a lot more reliance on the website if you can't actually physically go to the actual sites. Once again, this is a stock that's been around 170. It'll be probably 200 by the time a couple of years goes by. Very good company.
Okay, questions here from Karen and Sherviness about the new issue of Macquarie Capital Notes, which are going to be, I think they're Capital Notes 5. So look, the yield's very low. It's at a rate of going to be at 2.9%. I guess, with any hybrid security, my advice is don't invest if you don't understand it. But if you need some, income exposure and you want access to, pretty regular distribution, which I'd describe as pretty low risk, then, 2.9%, which Macquarie is paying, is the market rate for a second tier bank, not a second tier, but a non-major bank. So the major banks are now more like around about 2.75 or 2.6%. So there's value compared to the major banks. That's one way to look at it. And one trade possibly is sell some of your other bank hybrids and invest in the Macquarie. It won't be as liquid, but you'll get a slightly higher rate because it has to pay more in that category. Okay.
Paul, just before you go, if say over the next 2 years interest rates rise by 1%, what's for those people who don't understand hybrids, what do you think the Macquarie's hybrid rate will be?
Look, it shouldn't change the margin, Peter. So if interest rates rise, you should get more. It really is a supply and demand market. If interest rates were to rise a lot, I guess that hybrid margins would go back out because it would be more choice available for people in terms of interest. And when one of the reasons we're getting the compression, Peter, is because there's simply nothing paying any interest out there. And so that's why demand is strong. So if interest rates were to go up a long way, I think hybrid margins would go up as well.
Yeah.
And the banks would have to pay more to get them away. Let's go to a question here from David, if we can take that one live, John, and unmute that. I'm seeing him. Yep, let's go ahead. It's better to hear you.
Hi, could you hear me?
Yep.
I just wanted to find out your thoughts on Santos.
Yep, I like Santos. I think the Oil Search merger is probably okay. I mean, there's going to be some synergies. I don't really like some of the Santos Oil Search's assets, but I think it's just depressed because they're issuing a lot of script and everyone's now going to be long Santos and you're getting ESG risk. So I think if of any of the oil companies, I'd be more inclined to buy Santos than anyone else. So that's my view. I don't know what the analysts or your view is, Peter.
Yeah, well, my view is it probably is a buying opportunity. You know, with these sorts of takeovers, it sometimes can take a year or two to materialise the benefit of it. But looking at the chart, to me, it looks like a buying opportunity. And the analysts agree with me. They've got 25.7% upside for Santos. But once again, you've got all the problems that we discussed with Woodside, ESG, you're in the hands of OPEC Plus, you never know what these jokers are going to do. But if you look at the chart and look at the quality of the company, management's very good. It's probably a buying opportunity around these levels.
Yeah, it is really hard to just get a feel on just how big the ESG issue is, because our institutions don't disclose what they're doing. This is the fund managers. And I suspect that a lot of these companies, the people have just been exiting, not because they don't say they're not valuable, but they just don't want to have exposures because ESG has sort of suddenly become a really big issue for them.
And industry super funds are putting pressure on the fund managers they employ to respect what they think their members want.
Yeah.
Yeah.
So I don't know whether that selling has stopped, how much more is to come, and just what role it has. But it is something that just makes me nervous about putting more money into that sector at the moment, because I think it's a major reason why these companies just haven't gone up. So that's the thoughts on Santos. Okay. A question here from Julia about CIM, which I think is CIMIC.
Yeah.
I actually own some shares in CIMIC, Julio, and I just haven't bothered to get rid of them. I just sort of don't think that's a company you need to invest in. And the reason I say that is it's 80% owned by effectively the Spaniards and who own Hochtief, and they're working for them, not working for you. Doesn't mean they're not doing, you won't get rewarded, but their interests come before minority shareholders. So I'm not sure why you want to be invested in a company where one party owns over 80% of. It doesn't make a lot of sense to me.
Yep, I agree.
So there are other options available to you. So that would be my thoughts on CIMIC. Okay. Question here from Graham, a bit more general. If there was a sell-off, which large and mid-cap stocks would be your preferred buys? Well, I'll go a couple.
Yep.
There's a lot of very expensive stocks. I'd probably go for, I think, a long-term stocks like CSL. I think I wrote an article about the stocks that want to be core part of my portfolio. They're the ones I look at. So the CSLs, big sell-off, CBA if it was a big sell-off, BHP if there was a really good sell-off, Zero, those type of companies. Pete, that'd be my options.
NextDC would be one I'd be happy to buy on a sell-off. You know, Paul, you're right. I like Zero. If it was back down around $100 again, I'd fly into it. It was good to see NextDC's actually had a nice run lately. But also, Paul, if you're looking for some interesting, more risky ones, I suspect in a year or two, the Newark share price will be a lot higher than it is today once they flush out all the problems that have emerged. Because the prospectus, basically said this was a $5 company or so, and it went to $11. At its current level, $2.68. I suspect within a year or two, it's going to be closer to $4 than it's going to be $2.60.
Okay, a question here from Nero about Atlas at Arteria and Auckland Airport and Transurban. These stocks react to bond yields. Well, they do, yes. Whether that's logical, that's right, but they do. Do you think is up? So let's just have a look at Transurban. It's not doing a lot, John, I don't think. I think there are other drivers apart from bond yields. It's more about traffic. And Auckland Airport's in the same situation. So I don't think there's a lot of upside in the short term in these stocks. I think they've had pretty good recoveries. Let's have a look at Auckland Airport, John. I haven't seen that for a while. Can you put up AIA? It hasn't done much. I do note that Tony Featherston yesterday said he's a fan of Auckland Airport and Atlas Arteria, which is the former Macquarie infrastructure company that owns toll roads offshore. I think it's AIX, is it, or ATL?
I got it here. It's ALX.
I don't think there's huge upside. What do you think, Peter?
No, look, I think in 2022, these companies will benefit because the reopening trade is all about businesses that are currently suffering. And I know when we leave our office here in Spring Street in Sydney at 6:30, and I can go straight through the Eastern distributor and not being held up. I know these sorts of businesses aren't doing as well as they will be in 2022. And so that will be their share prices will be higher. I'm quite, and you can see Atlas was once close to $7, now $6.20. They will gain.
Yep. Okay. Question here about Amcor from Nindy. Value your opinion re Amcor. It's gone sideways for a long time. I think it's been going up. It's up this year a little bit.
February's been a nice rise, Paul.
I know it's if we ever talk to Rudy, we'll get Rudy on the program again shortly. It's one of Rudy's favorite stocks. It's also, I like Amcor. I think it's done a really good job, but it's probably not the most sexiest part of industry packaging, but it's paying a pretty consistent dividend. It's a quarterly reporter. I think it's a good core stock in your portfolio.
And by the way, going back to that question earlier, if there was a sell-off of the market, this is the kind of company I'd be happy to buy at $14 again.
Yeah, and you might say that it's all about a company like, James Hardie and those sort of companies that have been pretty pricey. A few questions about Treasury Wine Estates. This one from Lynette. That's one I'd look at in a good sell-off world. Let's have a look at TWE. Yeah. So again, not doing a lot, but not going down either.
Well, considering how it was savage around November, December when China started to pick on these guys, look at it. It's kept climbing up, telling us that despite the Chinese discrimination, it's done pretty well. Like it was what was it, $8 or so in November and December, and now it's $11.99. I think that's going to be, it'll hover around here until the news changes. There was talk about pulling out all their quality products, weren't there, Paul? Either as potentially being sold off to somebody else. But was there any talk about possibly listing the quality stuff independent? No.
I don't recall, Peter. I'm sorry.
There's certainly talk about the private equity could put a pretty substantial offer in, or another wine maker in, say, the US or OS.
Okay, we've got a few minutes left. Let's go to a question here from Craig on the phone.
G'day, guys. I was just wondering, Crown, is it a good chance to get into it now because it's dropped by quite a bit, or is it still...
You're a gambler, Craig. You're a real good... Mate, I'm not going to do it, but personally, I think this probably is around a buy-in price for a gambler. We don't know what's going to happen. but I think the value of the company probably is around $13. But if they have to sell, get a replacement company to effectively carry on the license, that's going to be messy. But seeing the stock go from $8.80 to maybe 10 or 11 doesn't seem inconceivable, Paul, does it?
Yeah, I think I read a report yesterday that said the breakup value without a license was about $7.50-ish or something.
Yeah.
Look, I'm probably with the view that they won't lose their Victorian license, but they will have to take on a whole lot of things, which includes a new board, new CEO, all those sort of things. In other words, they'll have to basically sell the license to someone.
Yeah.
And they'll be given time. That would be I'd be surprised the Royal Commission recommends losing the license totally.
Yeah.
You also got the issue in WA, so I reckon it's a gamble. It's probably a gamble that's almost worth taking, right? But you're going to have to be. You've got the Victorian Royal Commission to come out. You've got to get through a Royal Commission in WA. This whole thing might take a long time, and
That's right.
you expect those players like Tabcorp to come back again, right? That was just strategic pulling out of that. Then they haven't lost interest, I don't think. So
No,
was takeover offer, and Tabcorp was. There's three of them, but I reckon they'll come back at some stage.
And Paul, conceivably out there's a big hotel group that'd be very happy to buy the resorts and all that sort of stuff. And the gaming license would be just cream on the cake.
Okay, we might conclude on this question. This one question from Peter. What are your travel favourite stocks when COVID restrictions lift? There's a forward-looking question.
Yeah, I think there's four you can pick from. Qantas, and then where's the order? Qantas, corporate travel, Webjet, Flight Centre. That's the order I would put them in.
There you go. First Qantas, second corporate travel.
Corporate travel, then Webjet, and then Flight Centre.
Okay. All right. Well, we're out of time, but before we conclude, let's just have a quick look forward to tomorrow, Peter. Big night in the US with employment data out. What are we expecting, and what do you think we'll be talking about on Monday?
Yeah, well, the ADP number came out middle of the week, was a bit disappointing. The market did sell off on that day. But ever since then, the market's been rising on Wall Street. A number around 880,000 is kind of out there. If it comes bang on 880, I think the market will like it. If it's well below, the market will sell off. If it's far too high, they can sell off as well on the basis that, the inflation and the interest rate issues could be in focus. But I think the market would rather a beat rather than a number that comes in under.
Okay. Well, you can read about that tomorrow because, Peter, you'll be up at really early, as you always are on a Saturday morning.
Yep.
We'll get that out to you so you can see what happened in the US, what we'll be talking about on Monday. Don't forget our regular Boom, Doom and Zoom session on Thursdays, 12 p.m. Eastern Standard Time for half an hour. We do all the questions then. And we'll be back to, of course, you can read about our report on Monday. But Peter, thank you for joining us for our monthly webinar.
Pleasure.
And it being 1:30, which we like to close these right on time. Thanks everyone who sent questions in today. Sorry we didn't get to them, but it's really important, make sure you join us next Thursday for the Boom, Doom and Zoom. And from everyone here at the Switzer team, thanks for joining us this afternoon. Have a great weekend, and we'll talk to you next week. Bye-bye.